So, we're looking at some major moves in the ETF world. Spot Bitcoin ETFs saw a whopping $812 million outflow on Friday.
It's incredible. And that outflow marks the second largest single day loss ever for these products, right?
Exactly. These ETFs had been on a run with steady gains, but now the cumulative net inflows have shrunk to about $54.18 billion, with total assets under management dropping to around $146.48 billion.
Right, that's a significant dent. So practically 6.46% of Bitcoin's market cap is under these ETFs, which feels like a big risk signal to me.
Yeah, it's like a red flag for some investors. And what's really interesting is that major players led this exodus. Fidelity's FBTC lost over $331 million, and ARK Invest's ARKB wasn't far behind at around $327
That's a heavy
million
pullback.
in redemptions.
It really makes you wonder why these funds saw such drastic shifts. Were investors simply taking profits or reacting to something broader in the market?
It seems to be a mix of factors. On one hand, there's active trading with a daily volume of over $6 billion across all spot Bitcoin ETFs, and IBIT from BlackRock alone accounted for $4.54 billion of that.
Yeah, which suggests that despite the outflow, liquidity and interest remain high. That's a good point, but while Bitcoin ETFs are bleeding, how did Ether ETFs perform during the same period?
Right. Ether ETFs actually ended their longest inflow streak in almost 20 days, recording a $152 million outflow on the same day.
Wow, it must have been a shock for those riding that wave.
Yeah, the total assets for Ether ETFs now stand at roughly $20.11 billion, which is about 4.70% of Ether's market cap. And leading the losses were Grayscale's ETHE with a drop of nearly $47.68 million, then Bitwise's ETHW losing $40.30 million, and even Fidelity's FETH wasn't immune, shedding around $6.17 million.
That's a pattern we can't ignore. It's interesting how BlackRock's Ethe was flat, holding steady at $10.71 billion without any inflows or outflows. That almost feels like a safe harbor, don't you think?
Yeah, it's notable how one ETF remains unaffected while others fluctuate so wildly. The overall trading value for Ether ETFs was around $2.26 billion, with Grayscale's product contributing the most at almost $289 million in daily trades, which shows some ongoing volatility.
Volatility seems to be the name of the game in this space. Now, here's something that really piqued my interest. Corporations doubling down on Ether. I mean, according to a recent Standard Chartered report, companies are snapping up Ether at twice the rate of Bitcoin, right?
Precisely. Since the start of June, crypto treasury firms have been buying roughly 1% of Ether's total circulating supply, and there's talk that due to benefits from staking and DeFi, that could eventually grow to 10% of the supply.
Right, that's a substantial commitment. Some might argue that investing so heavily in Ether could be a double-edged sword, though, right? If volatility skyrockets, companies could find themselves exposed.
I can see that argument, but the counterpoint is these investments come with the added advantage of staking rewards and deeper DeFi participation. It's almost like earning interest on a savings account while holding a volatile
That's
asset.
a compelling perspective.
And speaking of inflows, there was a recent record-breaking day for Ether ETFs. July 16th saw a daily inflow of around $726 million, followed by another strong day on July 17th at about $602 million.
Yeah, those are huge numbers. But then, the streak ended on the day of these outflows. It makes you wonder if we're at the beginning of a trend shift or just a temporary hiccup.
It's hard to say for sure. The markets can be unpredictable, you know? It seems like some investors might be taking a breather after the big inflows, while others might be repositioning amidst the volatility.
Exactly. It's like a game of musical chairs where everyone's waiting for the next beat. I'm curious, though. What's your take on the overall sentiment? Are these movements more about market sentiment, or are there underlying structural changes at play?
Honestly, it's probably a mix, but the ETF numbers suggest that investors are being cautious even as trading volumes remain robust. The huge outflows from Bitcoin ETFs and stopping of Ether ETF inflows indicate some short-term nervousness, but trading activity tells us there's still plenty of interest.
That balance between caution and interest is fascinating. Do you think these shifts could eventually push Bitcoin or Ether prices more dramatically?
It's like a bit of a feedback loop. Massive outflows might signal investors taking profits, which could put downward pressure on prices, but then high trading volume might actually cushion that by attracting more speculative trading.
Yeah, I see that dynamic. And with Ether having that additional corporate backing and the potential for supply tightening through treasury accumulations, maybe its price narrative could diverge from Bitcoin's amidst these ETF flows.
Exactly, it's almost like a tale of two stories. Bitcoin ETFs are facing a stark pullback, yet Ether continues to attract institutional interest, albeit now it's also facing a cooling period after the long inflow streak.
That duality is really interesting. I do wonder if these ETF flows are reflective of deeper market strategies, like a move towards liquidity management or even portfolio rebalancing by big institutions.
It's quite likely. When you see players like Fidelity, ARKB, and BlackRock moving large sums, it could be part of a broader strategy, maybe to manage risk or reallocate assets in response to market
Yeah,
trends.
that makes a lot of sense. And then there's the whole narrative of corporate treasury strategies for Ether, with projections hinting at Ethe rallying above $4,000 by the end of the year. That's both exciting and a bit nerve-wracking.
Yeah, it's like high stakes either way. While ETFs are a clear indicator of retail and institutional sentiment, the Treasury moves suggest a longer-term perspective that's partly decoupled from day-to-day fluctuations.
It's a layered picture. One thing is for sure, the ETF ecosystem remains a fascinating window into investor behavior, with huge sums shifting around in a seemingly volatile market.
Absolutely. Whether it's over $812 million outflow for Bitcoin ETFs or a 20-day streak of inflows for Ether ETFs coming to an end, these numbers show just how dynamic and nuanced the market really is.
Definitely a space we need to keep watching very closely. So, in wrapping up, we're looking at a period of significant churn with ETFs, even as overall trading volumes hover high. Investors seem divided between caution and opportunism, which, as always, makes for a tumultuous but exciting landscape.
Exactly. It's a layered narrative where every outflow or inflow tells a bigger story about market sentiment, liquidity, and strategic shifts. Only time will show how these signals translate into long-term trends.
Yeah, I'm excited to see how it all unfolds. Well, that was a deep dive into the world of ETFs. And it's clear that every dollar moved plays into the larger picture of market strategy and investor confidence.
Absolutely, and it's like watching a high-stakes chess game. Each move matters a lot. Thanks for diving into this with me.
Right on, it's been a super enlightening conversation.